Happy Sunday morning. This is Christian from Hertz Tribeca Trade Group with your week ahead video, looking at the important technicals in the major indices, some sectors, single names, and also what the most aggressive option activity was from last week. Okay, so quick recap from last week. Pretty simple here. The S&P broke out last week, so Tuesday and Wednesday, real nice days last week. We had some good earnings also that propelled us higher, and then we kind of consolidated a little bit. But the main takeaway from looking at the S&P chart or the S&P futures is what I have up is, basically about a month and a half of consolidation, and the level for me in S&P futures was the 2270. 75 level, which I was waiting for a breakout. So we definitely got that, and we got that with this wasn't a small day. We had a powerful breakthrough of the top of value. So the uptrend is intact. After again, you had to be very patient and sell some premium, which we were doing the last couple weeks in terms of iron condors, and now we have the breakout. So the level that I've been talking about for the last couple weeks has been taken out. So a couple almost doji looking candles Thursday and Friday. If by chance we do get a return to value to that same level, what was resistance now becomes support and could be a nice area to add to longs here. But also a small MACD crossover here. We don't see a big separation, but it does look like that is a crossover. So something to keep an eye on there as well to see if that remains valid next week. Next week we've got another big week of earnings, very similar to last week. We've got 23% of the S&P 500 reporting, so that's 113 companies that are reporting. So another big week. Going back to this chart, I wouldn't be surprised if we get a couple days like we saw Thursday and Friday. It's really going to depend on how these companies report, and some heavy hitters report next week: Exxon, Apple, Amazon, Visa. I've got AMD in there because that's a name that we've been seeing a lot of call activity. UPS, a couple pharma names as well. Pfizer reports next week, but again, just a big week of earnings. So one of those weeks to kind of just really pay attention to how the earnings are, how the earnings come out. Like I said, Tuesday and Wednesday, we saw more names that beat earnings, and up we went. Next, I want to just talk about the Nasdaq because it's outperformed now for 4 weeks over S&P, and since we broke out of this level, it's just been up, up and away here. One thing to note is that it's now a little bit overbought. I always pay attention when the indices and some of the sectors get overbought on the RSI. When the RSI gets above 70, usually they don't stay unless there's really something crazy going on, but they usually don't stay overbought or oversold for that long of a time frame. So I actually did take advantage of seeing this overbought and selling, and I sold a little bit of the out of the money short-term call spreads in the queues, just thinking that we might have a day where we might consolidate a bit. And I'm always looking for places where I can sell a little bit of premium rather than just go straight directional the market, because if you've been participating in the market the last couple of years, it has been rare where we just continue to go higher, and we've seen a lot of consolidation. So I do look for opportunities to sell premium, which I did last week, but really strong breakthrough and continuation in NASDAQ. I want to just talk about small caps a bit because small caps have been just, they're always one of my clues that I find in the marketplace. Whenever we see good outperformance for small caps, it's normally a really good sign for the market. So I talked about this last week as well, which very different picture from last week's video newsletter, where we were breaking down, and just great to see that we had one day, I think this was on Tuesday or Wednesday, where we had just massive outperformance in the small caps. I'll follow through a gap up. I think this was on Wednesday, where we had some continuation in the small caps, and then Thursday and Friday a little bit of weakness, which kind of gave some good insight into what type of day we were going to have. So two things that I always watch, just right in the first 5 or 10 minutes of the session, is what small caps are doing. Are they leading or are they lagging? And then I also look at market breadth. If you day trade like I do, If market breadth, we do have an indicator for that. If market breadth is kind of indicating a choppy market, I normally stay out of or I participate lightly in day trading. If we've got really strong market breadth where there's a big participation, you know that there's buyers in the market and it's a better day to a better time to day trade. So we did that Tuesday and Wednesday last week. That was one of the first things I noticed was really strong market breadth, and I participated a lot more in day trading, and had much more profits. Tuesday and Wednesday were I made basically all of my profits for the week. I think I was up about $5,000 or $6,000 last week, and mainly uh, captured on Tuesday and Wednesday, and Thursday and Friday were basically chop. A little bit of opportunities, but it's just chop markets, and that's exactly what our market breadth indicator was telling us, was that day trading opportunities just weren't there. So anyway, so those are two hints or two things that I watch on a day-to-day basis that kind of help me out with whether I want to really day trade, and obviously watching levels, which we go over every day in the trading room. So that's a quick summary of the indices, and just to leave off here with small caps, we're back in the middle of value here. So neutral is kind of where I stand in this, and I would be waiting for an IWM, a break above this red line top of value, which is essentially 138, and then keep an eye as well for support on the one. Call it 134 and a half or 134.75. That's your level to the downside. So I really keep an eye on small caps to kind of tell me whether it's risk on or risk off in the market. Okay, so again, that's the index review. I always start with the indices and then kind of take that top level look and then drill into sectors and then drill into single stocks. So what am I for the week? We also saw breakouts in industrials, materials, consumer discretionary. These are all bullish, very bullish to see. Tech obviously did this a couple weeks back, so I don't want to discount this. Sometimes I forget to talk about the best performers of the market because I'm concentrated on what else is going to happen next. But real strong performance in the XLK ETF. Same thing with semis. Semis, when I put my recap together at the end of the day, semis were outperforming several days of the week last week, and just an overall good sign for the market, but really, really strong looking. Just to kind of touch upon these as well, XLI, which was a sector that I profiled last week, the previous week, is saying, hey, we've got a possible breakout that could be happening, and it looks like industrials took that next leg higher. Materials did the same thing. We actually saw some nice inflows going into one of the materials ETF. That's VAW, Victor Apple Wilson. That one saw a good couple $100 million into inflows. Very similar ETF to the XLB, but you could see a breakout above value area as well. So really strong looking, and it's great to see multiple sectors make that move, not just technology, but we saw a few other sectors break out. Consumer discretionary, XLY, also was a sector that broke out. One of the things that I detailed last week as well was option skew was running extremely high at 146. Now sometimes an option skew, just as a reminder, measures tail risk. So tail risk was really high. Doesn't always mean something bad is going to happen, but when options are pricing something abnormally, you want to be aware of it. So it did fall back below 130, or excuse me, 135 to 130. So still a little bit high, maybe something to keep an eye on for next week, but glad to see that dropped from 146 to 130. The VIX is also at a 1058, which is really, really low. So it just means that the market there's no volatility that's present in the major averages. So keep on the look. If there is some type of bad news in the marketplace, we could get a little bit of a jolt. But for now, it is what it is, and things are calm. So I remain constructively bullish long-term the market. And for this week, last week I said I was neutral. We did get a breakout above with the S&P, so I'm more bullish than I was going into this week. But keep in mind, I still think we're going to get possibly a choppy week with a lot of earnings this week. We also have, in terms of economics for this week, Sorry, I'm jumping around a bit. We've got a Fed meeting this week, so possibly some guidance on when the next rate hike is going to come. We also have on Friday we have the first it's the first Friday of the month of the new month, February. So we will get a read on January employment data. That's on Friday. Also from Japan, we get the Bank of Japan meeting, which is the 30th and the 31st. So those are the key events for in economics for this week. But again, I think earnings will be in the spotlight with over 20% of the S&P reporting this week. Okay, so it's just a little bit of a change. We went through all the indices, so just to kind of go through my newsletter, just kind of get us caught up to the midpoint. Sector review, talked about industrials, materials, consumer discretionary breaking out. Great to see. One sector that was a little bit of a change from last week to this week is energy fell back below the 50-day moving average. I had 7 sectors for probably a month that have been all above the 50, the 100, and the 200-day moving average. So the trend has been strong. But we have energy, I wouldn't say breaking down, but something to keep an eye on, just dipped below the 50-day moving average. And the other sectors which are in the yellow here, utilities, consumer staples, XLV, healthcare, REITs, IYR, nothing really, no noticeable change there above the 50-day moving average, but still most of them below the 100 and the 200-day moving average. So these sectors I continue to view as avoids right now. I'd rather be with the strength. Performance for last week, I'm not going to go into this. This is all in our newsletter. ETF fund flows, very strong. Equity ETFs posted almost $11 billion in inflows last week, and the distribution was pretty spread out. But large caps, names like obviously SPY sometimes skews the overall numbers, but strong inflows there. Same thing with sectors, technology led. So it remains to be the leader. XLK, the technology ETF, added $812 million. That's a lot. Also, the two semi ETFs, SOXX and SMH, also added inflows. Materials, we talked about them, and the VAW inflows. And then on the outflow, similar to what we talked about in terms of trend, healthcare, utilities, consumer staples all saw pretty large outflows. So nothing really changes there. We've got leaders in the marketplace, and we've got underperformers as well. In terms of international flows, again, same trend as what we've been seeing for the last month or so. International ETFs are also attracting flows, $4.7 billion in inflows last week into international ETFs, and pretty split last week between international developed markets, as well as emerging markets. They both saw $1.3 billion. Japan also saw inflows, pretty strong inflows there, $720 million. So again, a noticeable change from 2016. Also, EWU, which is the UK ETF, saw inflows of $256 million. Canada also saw inflows, and Europe had small outflows last week. But when you factor how much of a weighting are in the developed market ETFs, names like EFA, IEFA, EFV, those outweighed the small outflows in the specific European ETFs. Okay, so stocks of the next, I want to talk about ETF and ETF charts of the week, as well as stocks. Sorry, just trying to get that out smoothly. But AMLP, this is the one of the MLP ETFs. We continue to see call buying in this group. We also saw a roll in AMJ, which is a little bit different than AMLP. It's an ETN. Which I'm not going to go over the difference between ETNs and ETFs in this particular video, but there was a roll up from the 33 calls to the 34 calls. We're also seeing some call buying in some of the individual names in MLPs, but you can see the charts. From a big move down, you can see the price action is well above the moving averages, 50, 100, and 200-day moving averages. So I think giving this a shot, looking at where the price came from in some of these ETFs and securities, much higher. So I think you can remain long or be long some of these groups and using the moving averages as your stop. So the other thing, if you look at value areas, AMLP is also just above the value area for the weekly chart. So this is the new value area for 2017. So very simply, 1299 is an area to or a level to watch. As long as we're above that level, I like being long, and same thing with the moving averages. As long as we're above the major moving averages, I like being long there. A better name I think to play, being that it's a $13 ETF, a better name to play in cash, I think, rather than in options. Plus, it also yields close to 8%, so you can also pick up the dividend there. But I think very strong looking charts. Next group that caught my eye this week is XLF. The financials, they've all the money center banks have reported at this point, so it's been about a week and a half that have gone by. They've had the market's kind of been digesting that. They almost broke down a little bit. It was kind of a sell the news or sell premium around those earnings as financials already made the move. So all of the earnings reports look pretty strong to me. There was no major weakness in any of those earnings reports. So I'm watching for the next leg higher in financials. That's 2380 to watch for. That's the top of value. That's that red line on my charts. So I'm looking to go long here. And just a couple single names that I like in this space, which we saw a nice call buyer in Goldman Sachs. So I'm actually looking to possibly buy a call spread and sell a put spread in the beginning of next week. I think that's called a double vertical, going almost synthetically long, but you are capped to the upside and to the downside based on how wide you put your call spreads. But and put spreads as well. But that's a name I like. Also, JP Morgan. JP Morgan won a nice contract from BlackRock last week to be custodian. So this one's almost ready to go to break out. So I'm watching this chart as well. And then one of the insurers, MetLife, which reports next week, I believe on February 1st, also kind of pushing to the top of value as well. That may be a name that I play for earnings next week. But if you don't want exposure to the single names, XLF, all these names are in the XLF ETF, may be a way to participate in the sector without having that single stock risk. Next, I want to just talk about a couple international areas. I continue to like international developed markets. This is something that I've profiled in a couple weeks past. And the white line here is the 200-day moving average, and you could see these are areas of the market that are just starting to come to life. I believe and if you look at the history of where these things came from, much higher prices. So EFA is now trying to break above the sideways price action. So we get a little bit push higher and we're out of this sideways trend. And again, the white line is the 200-day moving average, a nice move now back above the 200-day moving average. So again, very easy, very simple. You could be long here and have your stop set to the 200-day moving average. As I mentioned in the fund flow section, we saw some inflows into the oops, this is wrong. That's not medical devices. This is the UK. And I think this is also interesting because we saw, I believe it was, I do have it here, $262 million of inflows last week. So just, again, something different than what we've seen in 2016. Some money going back into some of these areas that have really been dormant for most of 2016. So good to see that fresh money starting to be put back to work in some, not just in the U.S., but in some international areas. So also a break above the 200-day moving average. I did put on an option trade out, I believe, to July. So a little bit of a longer position, giving some time for this trade to work. So that's all the ETFs that I profiled in the newsletter. Just going through, I'm just going to go through what I thought were the most interesting trades, aggressive option trades from last week. So starting with Monday, we did see repetitive Microsoft calls. We kind of know the story with that one. Microsoft reported earnings, pretty good earnings, and had a little bit of continuation after earnings. So good to see there. SWN. This is a small cap energy name that we saw repetitive call buying. And so I would say a pretty speculative name. We saw call buying there. VIAV, which is the new symbol for JDS Uniphase. We saw call buying almost every day last week. So this is a name that reports I believe this week. Let me just double check this on Bloomberg. So maybe a name to possibly set up. It looks like in 2 weeks. So on the 9th of February, VIAV. Um, that's wrong. That's Viacom. Two mistakes in this video. They do report next week. I thought January 31st is when they report. So possibly watch this name, watch for a move on earnings for this name because there has been a lot of aggressive call buying. You'll see this a couple times as I go through a couple of the names. IBM, just a huge outperformer after earnings. This name just was on fire last week, and we saw call buying, aggressive call buying going to this. So it did kind of come in a little bit, but this was the move again using the value areas, a huge move above value here. And I would keep this name on your watch list for next week because again, you look at where this stock has come from, just massive underperformance over the years. I see a nice inverted head and shoulders, and we could be moving up to about 190 here. So keep this one on your watch list as we saw several days of call buying in that name. A couple other names that were here: DuPont. DuPont, we saw call buying before and after the earnings report. Very nice looking move after earnings. THO also saw call buying in that name. Yelp, some call buying there. TER Teradyne, which had really nice earnings as well. Small chip name. Keep an eye on that name as well. And getting into Wednesday, just huge buyer in MRVL. There was almost 40,000 contracts, March 16 contracts. I am in this trade. We were able to hit a couple profit targets in this one. So I'm still long about 35% of the position that I got into. If you're looking for an infrastructure trade or a Trump trade, CBI, Chicago Bridge and Iron, you could probably get into this trade a little bit cheaper than I did. But this is definitely a play on infrastructure. What interested me and why I got involved in this trade is it's tried to break above the 200-day moving average now a couple times and it's failed. So maybe one, two, three, four, fifth time is maybe the charm for this one. So I did take a position in this one with seeing call buying on a couple different names. Again, you could look at maybe the 3-year chart and you could see where this stock has come from. This was once above an $80 stock. And is now just about $34. So we'll see if it stays above the 200-day. If it doesn't, I'll probably be out of that one. But I figured it's worth taking a shot in this one, considering the risk to reward setup. Next, so that's Wednesday. Again, a lot of option activity. IPI, which we saw the material space, the fertilizers kind of gap up last week, so really nice performance in that group. This is one of more speculative stock. There was 3 strike puts, maybe a stock to purchase just in cash rather than options. Then going into Thursday, again CBI on here. Yum China also saw a nice chunky call buyer in this one. And then we saw calls in Goldman going out to March. I talked about how I do like that in the bank group, in addition to the XLF ETF. SM, which is a kind of off the radar energy name, saw call buying in that name. LNG, we saw call buying a few different times over the last week. In this particular name, I mentioned VIAV already, but a couple interesting plays. And then on the short side, a pretty chunky XRT. We haven't seen many of the retailers report yet. They're going to be coming out in the next couple weeks, so it could be a decent hedge that someone put on, or maybe a speculative position, thinking that the retailers will have continued weakness. And then on Friday, more interesting trades here. Disney, which we've seen a lot of chunky call buying. The June 115 calls, I think the open interest is above 40,000. So I want to see if these 15,000 contracts that bought, they're pretty sure that they look like they were being bought on Friday, but I will look at open interest to see if that increases. Again, just huge open interest on the June 115 strikes. Also, McDonald's call buying, they came in a couple times for those McDonald's calls. I believe their analyst day is on the 2nd. So could be some speculation that McDonald's is going to run into that analyst day. Also, UNH, a big chunky player in United Healthcare. This has been one of the best performers. This was no small trade, so only 420 contracts. But you look at the price that they paid, $18. The premium was $770,000. So don't let the size of the contracts deceive you. There, they paid $18 for those. So this has been a really strong performer years past, and it looks like it had earnings. And just to borrow from Jim Cramer, he was saying sometimes the name takes a few days to kind of digest the earnings, but keep an eye on that red line, top of value, as long as it stays above there. I like this healthcare name. One of the few healthcare names I like. Also, Kellogg, also a name with open interest. I have to check on Monday to see if that increased open interest, but other than General Mills, really haven't been seeing too much call buying as this has been a weaker area, consumer staples. So that's it. So thank you for watching the weekend video. Check out TribecaTradeGroup.com. We go over these setups much more in detail in the trading room every day. So go to TribecaTradeGroup.com. You could put in coupon code TTG to get half off your first month of the subscription, and would love to see you as a subscriber. So thank you for watching the video and enjoy the rest of your weekend. Thanks.